Hello again. Thank you for joining us for the panel discussion here today, which is the Digital Banking Forum. As you can see, we have our guests here joining us. They're slightly out of order on the icon there. Doesn't matter. No, don't change.
We won't be confused with
Exactly. We won't play musical chairs. All the best planning in the world has gone out of the window there. But joining me from my left, we have Odelia Torteman, Global Digital Finance Specialist at IFC, which is part of the World Bank Group. We have Jason Maude, Chief Technology Advocate at Starling Bank. Anton Langbroek, Global Vice President Commercial at Bitpanda. And we have Daniel Yubi, Founder and CEO at Payable. Please welcome your panel. Okay, I'm just going to give you a brief overview of our panelists because we've got bags of experience on stage here, and I think it's only fair to recognise that. So starting with Odelia, she's a leading FinTech specialist operating at the forefront of digital finance and technology innovation for the past decade, with extensive global experience across equity investments, technology consulting, operational management, and enterprise solutions. Jason is a coder, a coach, and a public speaker. He's got more than a decade of experience working in the financial sector, primarily in creating and delivering software, and, as I said, currently works at Starling Bank as their Chief Technology Advocate and host of the Starling podcast. You should be in this seat, shouldn't you? This is good news. And Anton, more than 20 years of experience in the tech sector. He's held significant positions at several software and financial companies, including as the Managing Director and General Manager of Mambu. His extensive industry experience and unique perspective play a crucial role in propelling Bitpanda's mission forward. And Daniel, a fintech entrepreneur from Cancun in Mexico and the founder and CEO of Payable, started his career as a practicing lawyer, but eventually pivoted to follow his true passion in product management. Listed as one of the startups that are disrupting the CFO tech stack, Payable is helping finance teams automate their financial operations at scale. So, fantastic panel to discuss digital banking. So, I'm going to turn to you first, Daniel, actually, seeing as you brought the coffee on stage and didn't get me one. What is driving the growth of digital banking, and what are the key trends that you think will shape the industry in the coming years?
Thank you, and really nice to meet you all. Probably you will find that I'm probably the only Cancunian or someone from Mexico building a company. And before starting Payable, I was at a company called Checkout.com. I was in charge of leading the marketplace platforms initiative. So think about how you are Airbnb, Uber, or any of these platforms, and how can you easily and in an excited way, you can go and start acquiring payments. And I think that's one of the trends that are happening right now. And I was listening to someone that says, it's been 20 years and we're asking the same questions than 20 years ago. And whenever you want to build something or change something hard, it takes a long time. And even though the problem is the same, the solution is massive different. Why? So let's say you're Airbnb now. If you want to improve your margins, you want to become a payments company. So that means you need to have a license. You have to be using a banking as a service provider. And you need to be able to get the money maybe from Amsterdam and then send the money to someone in Cancun or Mexico. That flow, it's very complicated. Like 20 years ago, it was really hard. Like the first PayFax, as it's called, is Stripe or PayPal. So that's one of the key trends that are happening. Another one that is really exciting as well is, I don't know if anybody is using Amex on Apple Pay. When you use your card, if you added Amex in your Apple Pay, you can see if you're using your card, suddenly you get the transaction on your phone. But if you go into the iOS 17 right now, you can opt in to give all your data to Apple. So you can easily go into your Apple Pay or your wallet, and now you can see every day the balance that you've been accruing on Monster, Starling, or any of these banks. So what's happening? Now we're seeing that Apple is storing our credit score. So tomorrow, I know for sure, it's happening in the US with Goldman Sachs. I think they changed the partnership there, but I know in the future, we're going to now get loans directly from Apple because they get access to our data, even though they're not a bank. They're just using us as a pass-through wallet inside the Apple Pay function.
Anton, do you agree?
It's hard to disagree, first of all, so I will not. Now, I think you're right? So on the payment side, definitely there's a lot going on, a lot is happening, but I would take it a little bit broader than just payments, right? So it's what we see in digital banking as well is that traditional banks are basically playing up the catch-up game to become more competitive with the new players in the market. And what the new players in the market are doing is basically trying to catch up with the offering of the traditional banks, right? And payments, of course, is a big part of it. But the question there is, who's focusing on the right things? Is it the product offering that you have? Is it the tech stack that you have? And how do you combine both of it, right? And I think if you look at a lot of, let's take digital banks as an example, we see that they're now going back basically to core. They have been running out and expanding throughout geographical expansion, product expansion, etc., and now actually seeing that they might have been moving a little bit too fast to follow up. And we now see that banks are now going back and focusing on their core markets. Let's take N26 as an example. We've just seen them backing out of Brazil because they want to focus on the core market. And I think that is an important message. We've seen it with Revolut. We've seen it with other neobanks as well. I think it's an important message is really to build up your base first. And that's exactly what we are trying to do as a company as well. Focus on our core market as well before expanding. I think that is a trend. And then the question is, what is the timing for you to expand your product offering to your customers? Not only with payments, but you could also look at investment opportunities, etc.
Yeah, no, I agree. I think that there is definitely a concentration on what the core of the banks have to offer is, and focusing on that. Growth isn't everything. Contrary to popular opinion, venture capitalists will not just throw money at anything at any time. You won't always be able to get venture capital for what you want to do. So eventually, fintechs have to realize that they have to start turning a profit, which can be difficult for some fintechs, as I think a lot of the sort of fintech spirit and ethos came about after the financial crisis, when banks concentrating far too much on making a profit at the expense of everything else caused a disaster. But I sense that in some ways it went too far the other way, and it was just, well, we'll just do what's good and what's right without actually concentrating on how we can be a sustainable business. And I think that fintech has to focus back on what it's doing to be a sustainable business. I think at the heart of fintechs, driving fintech growth, is still the idea that you can compete on features, you can compete on what you can do with your bank account, what you can show, the things that you can do with it, which was not a competitive vector before fintech came along. It was, you can compete on interest rates and, both for savings and borrowing. You can compete on customer service, and you can compete on the big one, and this was the bank's big secret, is when you sign up for your bank account as a student, do you get a kettle or a rail card? That was the big competitive driver, right? That was the thing that determined what bank account you got and what bank account you stayed with until death, right? That was the big thing. And now I think that fintech has come along and said, no, you can compete on what you can do with your bank account. And I still think that that is driving a huge amount of the competition.
Before we hear from Odelia, did you go for the toaster or the rail card?
I went for the rail card.
I went for the rail card as well, yeah. Odelia.
Yeah, first of all, good morning to everyone. Agreeing 100% with the other panelists. I think that, your question, what is the main shift with what's leading digital banking? I think in one sentence it would be customer obsessed, right? And we've been speaking about it for a long time, the shift from a product-centric approach towards a customer-centric approach. And what does it actually mean? It means that both fintechs, both traditional financial institutions, both telcos, companies, everyone that has anything to do with engagement with consumers are now starting to design the customer journeys and integrate the different services and product on top of that customer journey. So in today's play, everything is focusing around that. Now, if you add on that the technology development and the fact that basically in order to enable a holistic, omni-channel-based customer experience, you need also to have a backend that will enable that, meaning something which is lean, CapEx lean, modular, on a Lego block approach, something that also includes and enable integration of third parties, and here come into place everything around different types of open banking regulation around the world, which basically standardize those APIs-led integration. And everywhere you go, basically you see an experience which is completely different, but it is led with what the customer wants. Now, to take the latest trend of the last 2 years around AI, basically took it to the next level around everything that we currently have. How are we able to produce to our customers a better customer experience, a more personalized product? How do we harness all the data that we have? I think that what Anton mentioned regarding big techs that are entering that world, right? So you have Facebook, of course, that are offering payments. Of course, we had the Facebook Libra. What happens when a company with 3 billion users starts and decides to be a bank or starts to provide financial services in a very serious manner? Can they even do that? Now, with Facebook, the answer was no, right? Because they did not meet regulation to become actually a bank. And I think that we will touch that later. What's the difference between offering digital banking and between literally becoming a digital bank? And there's a big difference.
Anyone agree?
Yes, there is a big difference. Yeah.
I thought that might be a consensus moment. Okay, I'm going to move on here. So, and you've already, Jason actually alluded to this as well. If not competing on free gifts like a rail card or a toaster, how are fintechs competing? What are the key areas of competition that fintechs are leveraging to disrupt traditional banking? Daniel, start with you.
I should start. Yeah, I think it's what we were discussing. It's about the customer experience. If you see what Revolut is doing right now, they are over 37 countries. And if you think about it, if I remove JP Morgan, Citi, HSBC, what other banks are actually present in more than 30 countries? And it's very hard to name a couple. But it is this customer experience. And I was in, so by the way, I have a thing called FinTequila. So I'm from Mexico. So I have a community of fintech operators and founders drinking tequila. No VCs involved, just so everybody knows. And we were discussing about if Revolut should have a banking license. And I would love to get everybody's thoughts. And some say yes, some say no. And I believe that they should, because they're doing, the problem is the KYC, KYB, and this is one of the key challenges, of course. But from a feature set perspective, now they're about to launch mortgages as well, and they really want to make sure they can offer, and I'm not saying that Revolut is the best company in the world, I'm a Monzo user, but from a product hard perspective, they try to win through product. And that means they need to offer better experiences. So if you as a user are happy with the product, then you feel more comfortable taking, or that the company will take some margins of money out of you. So in my point of view, the way they're competing, 100% has to be through features. Should they collaborate with traditional banks? 100%. But I would love to get everybody's thoughts. Yeah.
Anton?
Yeah, I would come from a little bit different angle because, of course, you're right. But I also think they're competing in something we don't see every day. And that's on the back-end side of things, and that is on the cost, how to control your cost, how to go out to the market, which marketing tools are you using as a bank to win new customers, right? Because it's a new customer game for the challenges. It's not about getting out your product, it's first of all getting enough traction on your platform, enough customers to actually have a substantial kind of base and then go out and offer them new products. So keeping your customers engaged, that is where fintechs are much, much better on than our current banks, because the current bank is just throwing everything they have at me, and I'm like, okay. I just take it for granted that they have it. But if a fintech is really releasing something new, I'm getting excited by it. So their messaging that's where they're competitive, but also, again, on the technology side of things. And of course, the challenges have basically the advantage of building it the ground up, right? So that they don't have all those legacy issues, they don't have all the infrastructure where it's basically intertwined. Mm-hmm. So I would say that is the biggest competitive edge that they have, and also the advantage that will take them to the next level as well, if they don't grow slow.
So picking up on the tech, this is really interesting. I think I actually disagree slightly. I don't actually think that the legacy technology is what's holding the banks back. Starling Bank has been developing its code base since around about 2015 or about that. So we've been going for about 8 years now. developing a code base. Now, once you've been developing a code base for 8 years, you're sitting there going, well, there must be legacy in there, right? There must be some legacy in there. But we've managed to keep ourselves relatively legacy-free. Amazon, I'll use another bigger example, Amazon has been going for 20 years, or even more than that, you know, coming up to 25 years, which is roughly about half the time that software has been a commercial concern for the human race. They're not being slowed down by legacy, seemingly, you know, maybe they are internally, but like there's no indication of that, certainly from the outside. So what's going on here is that the reason that these organizations aren't being slowed down by legacy is because they have an attitude towards technology that is very different, like a cultural attitude towards technology. It's the way that the technology is developed. And I would actually say that Starling's biggest competitive advantage is not simply that we started with a greenfield technology site, it's that we started with the cultural attitude of how to develop technology in this agile, iterative way, which was accepted throughout the organization, from the CEO all the way down. So, and this has persisted. We've managed to keep this way of developing technology going, even though we're now, you know, have, 3 million customers and thousands of employees. We've now managed to keep this technology culture going, and I think that that is one of our biggest assets. The way we develop our technology is still very iterative. It's still releasing dozens of times a day. It's still, you know, keeping that sort of nimble way of doing things whilst at the same time being big.
Yeah, let me comment on that. So I've been doing this, like I said, for 10 years, and I had the pleasure to be accompanying a lot of financial institutions on the digital transformation efforts, as well as to be building digital banks. I was with Deloitte before, so building 4 digital banks around the world. And I have to say, I mean, to your question, to your remarks, part of it, I think, is indeed a question of technology, right? But it's mostly around strategy, because if we, starting also from what Daniel mentioned, should a bank, should a financial institution digitize to become a more digital banking oriented, or should he pursue a digital bank license? And if we double click on that, what does it actually mean? Should they open a new branch? Should they operate under the existing branch? Should they come up with a new core banking system? Should they add some kind of another middleware layer in order to make everything much more, you know, efficient? So before the technology question comes first and foremost the strategy question. If indeed we want to become more digital, what's the main goal? Is it to enhance our brand? Is it to actually offer now new value proposition and new services that, given the existing technological structure and the existing business and operational framework, we are unable to do? If indeed that's the case, what's the best course? Potentially we can just launch or integrate with another platform that would enable us to do that. And I think that open banking on that aspect enables and supports a lot of those integration, right? But if an organization is indeed choosing to pursue a digital banking license, and that's to you, that's a lot of a headache, right? I mean, there's a lot of regulation that comes when you are becoming a standalone digital bank, whether it's with regards to licensing, whether it regards to capital requirements, whether if it's regards to different procedures that you need to perform, KYC, AML, customer protection, and the list goes on and on and on. So I think it all comes back to first, what's the strategic agenda of the organization, whether it's a new player, or whether if it's an existing one. Sorry for the long answer, it's such a complex question, I think.
It is, and you talked there about, regulations. And we could talk for an hour about this, I'm sure, but we really can't. What are the key regulatory challenges facing digital banks? I'm going to ask Jason this first. Mm-hmm. And how are digital banks addressing those challenges?
Sure. I think the key, aside from the regulatory challenges that all banks face, I think that the key regulatory ones for digital banking is that a lot about the regulatory landscape and how it's developed and how it works is very based around the big tier 1 banks, the traditional banks, and so on. Now, sometimes that works to the digital bank's advantage, right? They'll come, the regulators will come in and say, well, you need to make this change. Your systems, your technology systems will need to change. You have 5 years. And the digital banks will be sitting there going, 5 years, we can do that next week. Why do we have 5 years to do it? And they have 5 years because, that's how long it takes the big banks to get all of their systems in order. But sometimes it doesn't play, play to our strengths. And there is a challenge there to not only sort of talk to the regulator, educate the regulator about how it is that we develop, how it is that we, do things, and why that is stable. I actually think that our approach to technology of releasing dozens of times a day, people say, well, how do you avoid risk inherent in change in that? And I would say, how do you avoid risk inherent in change when you're releasing thousands of years worth of work, man-years worth of work all at once? That's terribly risky compared to, releasing a small amount dozens of times a day, right? So I would actually say that our change management process is more risk averse. But, convincing the regulator of that is difficult because their mindset is very much based on what they have seen traditionally in the big banks. So there's a sort of education piece there to go on to say, it's not that we're ignoring all of these risks and, duties towards consumers and so on, but that we are trying to approach them in a different way. And we have gone back to first principles and then address them in a different manner. And I would say that that is the big challenge that we face.
Daniel?
Yeah, I can go. So I'll move into banking and payments, and mostly payments. I think the challenge with banking and payments in general is you're depending on where you are sitting, if you're the FCA or SCPR in France. And there was this time we needed to make a decision about how do we do KYC, KYB for a payments product. And in the FCA, it's very straightforward. You know what you need to do. But for the ACPR in France, by the way, this is not legal advice, but I would always recommend open your company in Ireland and not in France. I love French people, but the ACPR is really complicated. There was this rule where if you're onboarding a customer, and it was blurry, but the compliance team said, hey, yeah, there needs to be a real human confirming that the actual ID is who was submitted from. Like someone had to go and review that, right? And that's insane. Like that was even before ChatGPT and all this generative AI and all that stuff. It's like, how is that possible? But if you read the law, it doesn't necessarily say you need to have a human person, but you can interpret it in a way that you have to, in some way, make it less risk for according to ACPR. So regulation is very challenging. It's very, very challenging. My biggest advice as any of the companies out there is you need to understand your risk. In 2015, risk was heaven. Monzo, Starling, all of them, Revolut, they all started without being a banking license, right? They just use a prepaid card, and KYC, KYB probably wasn't as great as it is now. But now the level playing field is completely different. So when you're making those product decisions, you need to work really closely with your counsel team, your compliance team, and try to think in first principles and say, okay, this is the law, and this is why I love being, I was a past lawyer, I haven't read a contract in ages, but this is what the law says, and there's these different areas that we can go and make a bet, and we're going to be fine, and it's going to be okay according to the law. But then there's the other part, which is risk. And just to finish, this is a bit of a rant. Normally, companies, they mix compliance and risk. And that blurs the line because then if the compliance officer is also the risk officer, then they're always going to try to protect the business a lot. But if you say, okay, this is the compliance view, this is how far we can go and do something, this is risk, then you can make a bet on it because you're separating the problems into two sections.
Anton.
I can actually almost only comment on what I read, right? And what I read is AML all over the place, right? So especially if you're a new entity going live somewhere, of course you will attract a lot of people who will try to make disadvantage of you because they think your processes are not mature, et cetera, et cetera. So that's what I read, right? And actually what you said is a very interesting thing, right? You were comparing Ireland with France.
France.
I think it's almost a political discussion. It's not really a discussion to be had here on the panel, but it's a discussion about how can we create, if we look at Europe, a level playing field. Because if you're founding in Ireland, you have very much different regulation than you have in Lithuania, you have in Germany, you have in whatever. And even people put value on the banking license you have in which country.
Yes.
Right? So if all of a sudden you're more trustworthy if you have a German banking license than you would have a Lithuanian one or a Maltese or Finnish or whatever, right? So that's a political discussion. Let's not go into that one right now. But fully agree with you, we should fix it. right? And I think there we can play a role as vendors and fintechs and so on. But also again here, I think the biggest challenge for a lot of fintechs and banks, etc., is basically how to, if you want to scale and you have the regulatories on the other side, how do you balance your growth on the other hand and keeping up with regulations which are constantly changing while you are growing? So it's not just geographical growth, it's also product growth. So how are you handling that, and what do you do first before you expand into geographics or expand your product suite? I think that is then becoming the case, and then we're back to your story about risk, is how much risk appetite do I have to even, please not listen, but how much risk do I even take, maybe picking up a fine here and there, right?
Yeah, 100%. Yeah, for sure. Because it's probably going to take longer to try to, engineering-wise, solve every single problem that you think compliantly, or compliance you have to follow it, but risk-wise you should go and do. And that's one of the biggest challenges in fintech. And
that's what I think is the biggest regulatory
in
growth, yeah.
Okay, we are sitting in Westminster, but we're not going to discuss politics, as you said. I want to move on slightly here. Now, Daniel, you mentioned AI earlier. It's a recurring theme. And Odelia, you mentioned customer experience. So I'm going to ask you first here. What role do data analytics and AI play or could play in digital banking, and how are they being used to enhance the customer experience?
I think there already are. I mean, it's been years, and what I love about this industry is that every year there's a new buzz, right? And then everyone are reinventing the wheel. You know, same I think with Web3. When Web3 was introduced, everybody were like, this is the key element. A lot of these things have been around, but just in a different name. You know, infrastructure of DLT has been around. Same for, I think, of course, data analytics and AI. Banks have always used a lot of data analytics. Everything in banks is around data. We spoke about regulation. Regulation is such a substantial, heavy pillar in banks' everyday's operation that you need to constantly find ways from one hand to automate it, to make it an easier one for it, and from the other also to be aligned with the changing regulations, which continues to change as the technology continues to change. So it's basically two angles that are running together. So I think that given the latest development indeed that we've mentioned in AI in recent years, it has done marvelous things to the financial service industry. First and foremost, of course, with the ability to better analyze, cluster, mitigate, store data in a better, more efficient way. And second, 2023 and generative AI. I think that for the financial service industry, it opens a world of possibilities, right? From the more, I would say, common things like chatbots and enabling them to do much more than just answer simple QA questions, but rather to analyze customer sentiments, to be able to offer much more creative products and services, to diversify investment portfolios from one side, from the other side, the ability to generate complete code lines, images, human voices, strictly out of the data that has been inserted is mind-blowing for the financial service industry. A lot of focus around fraud detection, right? Again, using different types of machine learning analysis for that. Insurers are gaining a lot, everything around the underwriting process, which is extremely heavy, cumbersome, and expensive. Lending, of course, so, and these are just to name a few, right? Without going into the two more creative, but I think that it has done amazing and it will continue to do so.
Yes, absolutely, it will do. If you have all of the protections in place. I'm now going to sound the sort of the negative note and go, not negative note, but cautious note of going, this is all fantastic, and you know, absolutely, everything you said is true. You can do all of this stuff with it. You do need, however, protections in place. You need to make sure that you are monitoring all of your AIs correctly. You need to make sure that they are performing as you expect them to perform. You need to make sure that the biases within them are biases that you want and not biases that you don't. You need to be able to explain them. You need to be able to explain not only individual journeys through the AI, individual decisions, but decisions en masse, how the decisions are being made in totality. You need to have, you know, all of this in place. You can't just say, well, we asked the computer a question and it said this, and we trust the computer. You know, that's you know, tantamount to saying, well, you know, the gods on high told us that to do this. You know, the regulator isn't going to accept that. So you need all of this monitoring and backing in place. You need good data. You need to spend ages building out data pipelines and so on. If anyone here is looking for a job or a career change, please choose data engineer. You will never be short of a job. Loads of people want to be data scientists, but the one thing that everyone's always short of is data engineers to hook up the piping to make sure that data is being pumped around to the right place in the right way, is being stored correctly, and so on and so on. So you need all of this in place to make sure that your AI is giving you good decisions and is making good decisions. And there are all sorts of ethical challenges with AI as well about how it makes decisions, how it processes data. I'm sure that when I was a kid, I read Isaac Asimov books, and one of his characters was Susan Calman, who had the brilliant job title of robot psychologist. And how we laughed at the potential of a robot psychologist. But I think that job is now rapidly coming up on us. And I think AI ethicists, AI psychologists, people who explain how AI works, what it does, and why it does it, in any particular case, are going to become more and more important. So all of these things need to be in place. AI AI is for life, not just for your quarterly report. You need to have all of these things in place in order to use it properly.
Yeah, just maybe for me to expand on this, I think AI is like when you hire an intern. You don't hire the intern to say, go on, and then change the world. You are very direct. You say, I need you to do X, Y, Z. Do you understand? Yes, okay, go on. And then when it's back, you supervise and review the work. And that's just the way you need to treat now AI until maybe tomorrow it can be better. For trends and what's happening in the FinTech space, going back to it, yeah, so customer experience, of course. Now many of us can create a GPT. OpenAI launched a new change yesterday or before yesterday, which is pretty exciting, where you can just upload your data. I know maybe that's, I don't know how you feel about it, but you can upload internal data, and then you can say, hey, you can ask these questions and send this link to someone, and then suddenly you can just be doing forecasting, any questions, you can go and do it. So it is pretty exciting. And yeah, AML, KYC, like everything we were discussing before now can be enhanced. This person, I would love to see what the regulatory view will be on saying on the ACPR, going back with them, is would you count these AI as a good way for you to review better, better KYC? And last but not least, going back into my Mexican roots, I am Daniel Coitiyu Segura. And that's horrible because at Starling, I'm Daniel Segura. At Monza, I'm Daniel Yubi. I'm just, my name is bastardized everywhere. But imagine you are able to, if you are a user, human, you can easily tell, oh, well, yeah, this is Daniel Yubi, this is Daniel Segura. You can infer that really easily because you're smart, you're human, you can do that. But maybe AI can help me with that, maybe in the future. And then if you bring this into Mexico, where we have something called INE, and KYC is horrible. So if anybody solves KYC or AML in Latin countries, oh God, you make a lot of money because the biggest problem is fraud, right? But yeah, if there are any ways that you can go and add this into KYC, KYB, AML, I think any fintech would really love you.
It's just wow, right? Because I think basically everything's said about it. And if I hear, I'm simply not grasping it all the time, right? Because if you're just looking at what it sounds like a box, everything is in it, you can do everything with it. So we as a company basically decided, yes, we need to do something with AI, but then what?
Yeah,
right?
That was a question.
So the first thing we then was thinking, okay, how can we then do the first thing where we are in business for? And that is supporting our end customers. So we start to build use cases on how can we support our end customers, and basically, of course, and we're going to be open on this one, then how to monetize on that, right? But first, we need to learn from AI to become AI, basically that's right. If I hear my wife talk about neuro-linguistic modeling, and she was doing that like years and years ago, my brain just stops after 10 seconds. So I would leave it at that.
Okay, well, I think we're going to have to leave it at that in a second. I just want to get a final thought from all of you. Please keep this brief because we are running out of time. How can traditional banks and fintechs work together to deliver better banking services, or should they not? Should they not work together at all? Odelia, you go first.
I think they must work together. I mean, there aren't really two separate financial service industry. I've always said that, and I think even more and more when we're seeing the advance and the technology developments that are currently happening across the DeFi world, across the crypto world, and crypto, not just on the sense of a currency, but as a back-end technology, and the functionality that it enables are becoming a bigger part of the financial service industry, right? Still not a major one, but a part which everyone are looking at. So I think that in order to really consolidate, in order to make sure, and I absolutely agree with you regarding making sure that risk factors and frameworks are being held and that we're doing it in a standardized way. But in order to, structure and make this whole universe and blue ocean of fintech technologies and blockchain technologies, make it straight, I think that there must be a collaboration between the two, both from the regulator's point of view, both from the bank's point of view. If a bank now wants to embrace a technology to enable this specific feature, then this technology needs to be in line with how the bank works. Otherwise, we won't be able to scale. And in the end of the day, from the consumer protection, and I think that that's the most important part, is the consumer. We need to make sure that every fintech and every company that has anything to do with the customer journey, that has to do with touching its finance, needs to be secured, needs to be governed, needs to be that if anything goes wrong, there's someone to call, there's someone that stands behind it. And I think that in most of the fintech companies, we have indeed regulation. Also, by the way, in the developing world, it's based a bit differently, but it exists. And I think that these things are must in order to make sure that we're able to actually get the most out of the potential that these technologies can bring.
Thank you. Jason?
Yes, they have to work together in terms of, I think the most important way they have to work together is in terms of sort of network resiliency. As a customer journey starts to go through more and more nodes, more and more different companies, there are more and more different players enter the system, it's going to become very important that when a payment is going through 3 or 4 different companies on its way from one place to another, that all of the nodes along that chain are resilient, and that they all respond to problems by going, well, let's fix it, let's make sure that the customer has a good experience, doesn't notice, is impacted as little as possible. If you just say, if your attitude is, well, it's not our fault, it's a fault somewhere else, we're not going to help fix it, then you will be deemed an unresilient node, and as the network grows, you will very quickly be bypassed, like the railway running around a town, and we all know what happened to the towns that didn't get the railway. So network resiliency is very important, I think.
Anton?
Yeah, it would be shocking if I would say no, right?
Yeah.
Simply because our whole business model is built up on collaborating with traditional banks and traditional finance institutions, bringing our service to their end customers, right? But let's move away from why we think yes. In general, I always believe in that you should turn to people who know best, right? Just about where do you learn from? If I want to learn about technology, I'm not going to talk to a COBOL developer anymore. That was like 40 years ago. Hence, back to my legacy. Legacy for me is not 20 years ago, but 40 years ago, right? So a lot of banks are still running on that. So I would always advocate to go out and talk to people who are experts in their field, and then build an ecosystem when it comes to infrastructure, when it comes to your product offering, basically to everything. And the more technology opens up and gets more available to everybody, it's become much more easy. We're now having APIs, right? We can do 8 APIs connecting 2 systems together. In the early days, we were sitting together and having a month of discussion on how to structure the interface, which data fields, et cetera, et cetera. So the more technology becomes open, the more services come open, I would say the easier it will get. And also, at the end, I think that even traditional banks or financial institutions will become fintechs themselves. There is no way around it.
And Daniel?
Yeah, so I find it funny because traditional banking and neobanking reminds me of salespeople and product people. There's this kind of like a fight between them. One is trying to sell and build features and acquire customers, and the other ones are trying to just to keep things working. Yeah, definitely they need to work together. I think the way I think about this is we are in what we call wave 3, in not web, but wave. So wave 1 is 2015 when Monster, Starling, Revolut, they wanted to build a neobank, right? And they realized, a lot of people there, that it's really hard to build infrastructure and everything in there. So wave 2 happened, and then you have Modular and all of these banking providers that they are working or had to start working with traditional banking to store the funds. Meanwhile, they become the front end. Wave 3 is where Payable comes in, and we've been focusing a lot on the neo-banking consumer side of things. What Payable does is we help enterprise companies connect to corporate accounts. So we say, hey, look, your traditional bank is amazing at storing the money, but it's not great at software. That's the reality of it. In consumer, it's amazing. You get, the CFO is using Monzo, but then gets into his job, and then suddenly is going into a spreadsheet and going into HSBC Net, which is not great, if anybody knows this. So it's like, how do you operate every day? And I think that's what we see this now, where you can say, well, you are great at storing money. Fintechs are great at software and features. There needs to be a Venn diagram of that, KYC, like all of these things we've already discussed. But if you find the right balance, then it's a massive win. The thing's incentives. How do you do that? That's a future that we'll see. But I think definitely they need to go and collaborate together.
Okay. Perfect way to end the session, I think. Thank you so much, Odelia, Jason, Anton, and Daniel. Thank you.